Welcome to the Navigating Dental Insurance Podcast, where we don't take from insurance companies. Here are your hosts, Mr. Jordan Comstock and Mr. Ben Tuine.
Welcome, folks, to another episode of the Say No to PPO's podcast series. My name is Ben Tuine, Jordan Comstock, my co-host. How's it going, Jordan?
Yo. Doing good, man. How you doing?
Oh, you know, Friday, sunny, no rain, no storms, thankfully, you know. Grass is still green. Life is great.
It's going to be a great day today. Great weekend.
It is. And I
already went kayaking this week. I've been kayaking every week for the past 2 months.
It's like on your perpetual vacation, Jordan. You know, some of us are envious of you. I'm kind of afraid to say, you know, it's great to be a football weekend with all the controversy that's going on around the country. So I'll be safe and say, looking forward to college football this weekend. And that's it.
Nice.
Hey, folks, we got a great guest. We have Cody. He is a certified public accountant, and we thought it was a very good idea to bring on a CPA on the podcast. A couple of weeks ago was Business Tax Day, and I scrambled to get all the stuff ready for my my CPA here in Lehigh, and then we have tax where we actually have to pay, or actually that's when I'm told that I have to pay money when we file the personal taxes here in about 2 weeks. So we got Craig Cody. He's a certified public accountant, a certified tax coach, a business owner, and a really cool thing is that he's also a former NYPD officer, 17 years experience on the force. Cool. In addition to being a CPA for the past 17 years, he's also a certified tax coach. As a certified tax coach, Craig belongs to a select group of tax practitioners throughout the country who undergo extensive training and continuing education on various tax planning techniques and strategies to become, as well as remain, a certified tax coach, which is pretty cool. I didn't know that. With this organization, Craig has co-authored an Amazon best-selling book called Secrets of a Tax-Free Life, and recently authored 10 Biggest Tax Mistakes That Cost Business Owners Thousands. Craig, welcome to the program today.
Thank you very much for having me, guys.
Hey, I have a question. I want to stick on the New York the police department thing here for a second.
Yeah, let's do that.
So when did you retire? When did your 17 years end?
2000, September of 2000.
Wow. So you missed 9/11 then?
Yes, I was a very lucky person.
Wow. That's amazing.
That's pretty, yeah.
So a lot of people know on the podcast that I actually used to work for the Maricopa County Sheriff's Office in Phoenix, Arizona. Not 17 years. I was there just for a couple of years, and so I have that small police background. And it's kind of interesting in the dental industry. You don't run into a lot of people that are either reserve officers or that have worked in the force as full-time sworn officers. Do you mind sharing any interesting or fun experiences you think the listeners might want to know that you dealt with as a police officer?
Guys, I just lost your audio.
Oh, let me.
But I guess one of the, I don't know whether other people would consider it interesting. One of the, this is going way back to when I was a cop in Midtown. This was way before, this is probably in like 1986, 1987. I was in a
Jordan, I didn't hear a whoa, Jordan.
I was just going to do it, Ben.
Oh, okay.
Okay, well, you guys,
Jordan,
I'm dating myself, am I not?
Jordan wasn't born then. Or were you born, Jordan?
I was born.
I'm just joking. Sorry, Craig.
That's okay. That's okay. So I was in a plainclothes anti-crime unit, and I was on patrol with my partner at the time, Tommy Mullen, and we were riding around in New York. We had a New York City taxi cab that we drove around in, and we came across a group of probably about 75 kids that stretched the block and a half on, I think it was probably Park Avenue in Midtown Manhattan, and they were just going up to people and just pushing them against the wall and grabbing their wallets and moving on. I mean, there's just so many of them. And, you know, we were calling for help from basically all over the borough because we wanted to try and get as many of them as we could. And we were just going up to people and asking them for their business card after they were robbed. I mean, they weren't getting hurt; they were getting roughed up a little bit, but no one was in grave danger. So
Right.
we were just trying to contain the whole thing. So I mean, they even did a priest. Finally, like enough was enough, and we had to kind of interrupt this thing, and we got into a foot chase. They scattered. There was 2 of us, and there was probably over 50, 75 of them.
Wow.
And they scattered. And I happened to be in pretty good shape at the time. So I got into a foot chase, and I was going after one guy, and I had, I mean, people saw this huge crowd of people running and stuff like that. And I had people jumping out of their car and said, "I'm a FBI agent, go get that guy." And so finally, I caught up to the guy after I'm putting a foot pursuit over the radio, and people telling me afterwards they could see I'm running out of gas. Okay, I finally catch the guy in like a bodega somewhere. I think it was a Chinese bodega. And I'm wrestling with the guy. And like I said, I'm in pretty good shape. And these are all high school kids.
Right.
And I finally almost get control of the guy. And some guy walks in off the street and starts giving the guy a noogie. Okay, and telling him, "You can't do this, but I can." So it turned into we wound up arresting about 7 of them, and we went to trial, and they got convicted. But that was a long time ago, so that was interesting. I don't know how exciting it might sound, but it was interesting.
Hey,
it took me 2.5 days to process the arrests.
Wow. Well, anything.
What does it usually take to process an arrest?
Well, back then it would take you probably about 16 hours to process an arrest.
Wow.
Remember, this was kind of before they were real computers.
Yeah.
So I must be using one of those computers today, the old ones.
It seems like that, yeah, Ben.
No, that's pretty good. That's pretty cool. My nephew's in the police academy right now up here. He's going to be working for the Provo Police Department. But he applied everywhere, and I told him, "Come here. I'm Polynesian, and there are Polynesian problems all over the state of Utah." And he got hired. As a matter of fact, one of my old neighbors, he used to be the chief of the American Fork Police Department, and he kept asking me to join the reserve program, and my wife kept saying no, no, no. So now that my nephew's in the police department, I think I'm gonna go back and renew and go through the renewal process, because I let my certificate expire, and I just love what's involved with police work. It's really fun. It's not as dangerous as people make it seem to. You see all the bad videos on YouTube and on the internet, but it's actually a very fun employment. Yeah.
Right. 99% boredom, 1%.
That's exactly right.
That's funny.
It's so funny. Like when people ask me, and I want to ask you, like, I don't know if in New York you did any, because what we did in Phoenix is, we were mainly chasing tail lights and just responding to calls from dispatch. But from time to time, you're just it's so bored that you chase after the speeders. And what was did you do any of that? Did you do any like street patrol, or what do they call it? 225? Is that the assignment? I don't know if that's the same.
No, it was just I mean, when I first got on, I walked the foot post in Times Square, and at the time, this is like when I tell people now, they're like, there was 6 of us on one side of the street between 7th and 8th Avenue, and there were 6 people on the other side between 7th and 8th Avenue, and there were still people getting robbed.
Wow.
So it was definitely different. And my son is actually a 3rd generation police officer.
Wow.
So my dad was a cop for 33 years, and that's kind of what brought me into it. And my son followed in the same footsteps.
Well, that's cool.
And what brought you to become a CPA after being a policeman?
Well, before I became a cop, I was an economics major. I was always kind of into business, and as looking forward towards retirement, I said, I need to have something to do, make money, support my family, and I like taxes, and I went back to school for accounting.
Right on.
Well,
That's awesome.
we like you because we hate taxes.
Exactly. Yeah.
It's kind of all about keeping more of what you make and doing it legally.
Yes,
Yeah, I love that. So
Yeah.
you got a book, The Secrets of Tax-Free Life. I already like the title of it. Before we go on to any other questions, could you kind of summarize what you say in that book, if you have an overview of it?
Well, I co-authored this with about 9 other people I know.
Oh,
so
cool.
My chapter was kind of about, how to make your child's cleats tax deductible. One little thing about
Child's
dealing
cleats.
with your kids and
Yeah.
stuff like that.
That would have helped
But,
with my parents. They had 11 kids. That's a lot of cleats.
Exactly.
Smokes,
exactly.
11.
But my most recent book, which I'm actually going to offer your readers, your listeners, if they'd like it free, is the 10 most expensive tax mistakes that cost business owners thousands. And there I go into a bunch of different things that can save people money.
You know what? That is a huge offer. I'm actually excited to read that because, as a small business owner, you're paying so much in taxes, and you got to think, gosh,
You got to be strategic.
when you fill up at the gas station, you're taxed. When you buy groceries, you're taxed. Everything you do, when you hire an employee, you're taxed. And I was doing the math the other day, and I think the money that I spent in taxes in 2016 was over 50% of my income and over 50% of the business income, I think. And it just makes me upset, that we have to pay so much in taxes. And unfortunately, we don't get too much of what to say other than voting for the politicians that spend the tax dollars. But it's just so frustrating. So just to explain to the listeners, the reason why we have Craig on today, Craig, our podcast is Navigating Dental Insurance. And the main thing that we focus on is how to reduce those dental insurance write-offs. As a dentist or a physician or a doctor of any type, when you participate with an insurance carrier, you're required to accept a discount or a negotiated discount. And so consequently, when you provide treatment, you're writing off a bunch of money in order for you to be a PPO or an in-network provider with a lot of these plans. So what you're talking about here is the tax planning. You would incur a huge tax liability. In essence, you're taking a discount on the PPO write-offs or PPO discounts, and then the income that you earned is an additional tax, additional money that you don't get to keep. And so our podcast is all about how to help the doctors be more efficient when it comes to dealing with dental insurance. But we're going outside of the topic today because I feel like this is key and important because, taxes isn't a fun thing. If you're not set up in terms of the right business and knowing what the right write-offs are, you're losing thousands of dollars as a dental business owner. So what is proactive tax planning, and how can people maximize it? How can people maximize your version of tax planning?
Well, they can maximize it by basically planning and communicating with their tax professional. So most people do not communicate with their tax professional, and unfortunately, most tax professionals aren't communicating with their clients on a regular basis. Most CPAs are really good at putting the right numbers in the right boxes. They're being very compliant, but they're not being proactive. It's almost like they're looking in a rearview mirror and recording history instead of making history. So we want to have our clients plan, okay? And people spend time, they research a car, they research things that they're going to spend a lot of money on, but nobody is really doing, or a large portion of the people out there are not doing any planning when it comes to taxes and how they can save money.
Yeah, I think I could agree with that. I mean, my CPA only contacts me maybe 3 weeks before September 15th. We automatically file an extension. I don't know if you do that with your clients, but like as a business owner, how do we get CPAs? I'm sure you'll get a lot of people calling you, and you can help resolve that communication issue. But as a business owner, where we only have control over what we do, what's your recommendation there? How do we initiate communication, or what should be communicated to the CPAs?
Well, I mean, you should have an ongoing relationship with your CPA, and what we do is once we get our clients set up, we actually do a monthly call, and we usually set them up via WebEx or Zoom, and we go over their profit and loss and their balance sheet every month. And it's not just to look at the numbers, it's also to see what's going on. Because if we know what's going on, we can help them plan and optimize the tax benefits from whatever they're going to be doing. So it's that communication is key. We send them a link, they opt into the link for a date and time that works for them, and then we have that call. And because we're able to do it, from our office via Skype or WebEx or something like that, and they're able to do it from their office, we're not wasting anybody's time. Right?
Yeah, that's
nobody's
nice
traveling from point A to point B. And the client gets a lot of value out of that.
Yeah, I would imagine they get tons of value because I mean I always have tax questions for my accountant, and sometimes, well, I got a cell phone so he lets me text them, but um yeah, I would love to have like a monthly meeting. I think that's super beneficial, especially with dentists because they get so bombarded and so spread thin throughout each month, and they don't have much time to go look at their profit and loss and balance sheets, you know. So I think that's a huge benefit that you guys do for your clients.
Yeah, no, it works for everybody. They're happy, and we make sure they stay on track and they save their tax dollars.
Awesome. So, what is the biggest mistake you see small business owners making regarding taxes? And maybe, do you have any examples that maybe you see dentists making as well? But answer just the generic one first, and then if you have other examples of
the
dentists.
generic is one of them we talked about is failing to plan. Okay, and the second really is the choosing the wrong business entity. Okay. Typically what we see is, somebody starts a business, and it could be a dental business, and they go to the attorney, and the attorney says, okay, we'll form an LLC. Okay, that attorney happens to like LLCs, or we're going to form an S corporation, or you know what, you could be a sole proprietor. It doesn't make a difference, and they operate out of these entities, and there may be a better structure for them to be operating out of, which can be more tax efficient. So those are the two big problems: failing to plan and choosing the wrong business entity. And it goes, dentists are business owners just like everybody else.
Yeah.
I hate to say it, because I see there's a lot of people that consider themselves dental specialists, CPAs. But,
Yeah.
They're just they're another professional out there that's in business for himself and herself, and eventually they may be looking to buy real estate to operate their practice out of, or buy other businesses such as other dental practices. So we like to treat them just like every other business owner out there. Give them all the good advice and help them do the things they want to do, and do it in a real tax efficient manner.
Yeah. Let's stick on that for a second here. So the business entity type, like I'll let you know how I set up my business, or at least how I was advised to set it up. So I created an LLC for my business. So Veritas Dental Resources is an LLC. And my attorney advised that, well, you can't be an employee of your LLC, so you're going to have that LLC owned by an S Corp. And the S Corp is designed to be a parent company. And I told him that I'm going to have multiple businesses that I'm going to own. And he said the S Corp would be a great umbrella, a tax umbrella for all the other LLCs that I'll own. So I now can be an employee of my LLC without penalty, and I don't know how all the laws work with taxes and all that stuff. But
And I'm assuming each state may vary, right?
Yes, the rules in each state as far as legal entity and what you're allowed to be based on your legal entity is different.
Gotcha. So with
by
that,
state.
I'm seeing that common in dentistry though, where they have an LLC or PLLC or PC, and then they have an S Corp, just like I do, that's over it. I mean,
it's like the umbrella organization. Is that how it's set up for you, Ben?
Yeah, I don't know how it all works, but the income that I get, let's say from another company that's not tied to what we do at Veritas, we set up a separate LLC and earn money off of that. So the main S Corp has either 100% ownership in the LLCs or a shared ownership, but the LLC, the S Corp is what we use for our filings. My tax filings. I don't know how it all works, but in the end, I honestly don't know if I'm doing it efficiently. Like how can business owners use their CPA in a way to make sure that your structure's right and that you're maximizing every single tax write-off opportunity that's out there?
Well, you need to communicate with them, and they need to communicate with you. And if you're trying to communicate with them and they're not communicating with them, there's a wonderful thing out there called the internet, and you need to find somebody that's going to, be able to communicate with you, because it's, like I said, it's all about the communication and the planning.
Right. Yeah.
That's awesome. Let's see. So, next question I have here, no worries. How can business owners use their CPA to their advantage?
I'm a broken record here.
Hey, that's a good thing. We learn by repetition.
You want to give him information, okay? Communicate with him so that they can, really help you plan and figure things out so you can be more efficient and keep what you make. So it is a broken record, but it really does come down to, keeping the lines of communication open.
Yeah. Yeah, I think that makes sense. I mean, as a business owner, sometimes I don't know where to start though. Like I don't know what to communicate to them other than, I mean, they have access to our QuickBooks. Like what should you be communicating to them in terms of, like things that would affect taxes, for instance?
Right. So what you need to communicate is things that you want to do. Hey, how can I make this tax deductible legally? Okay. Can I pay my kids? Is that legitimate? Can I set up a medical expense reimbursement plan? Am I allowed to have a home office? How does that work? Does a home office allow me to write off other things? What is, how do I maximize all the different things I'm doing so I get the greatest tax benefit that the law allows me to do?
Yeah. Do most CPA firms have bookkeeping services, or bookkeeping separate from a CPA firm mostly?
I mean, it depends on the firm. Okay, I would say the vast majority probably do not have bookkeeping services. We actually have a bookkeeping service that we offer when we work with a client. We do everything from A to Z.
Yeah, and I think
awesome.
Yeah, I think that's key because wouldn't you want to know? I mean, I'm just trying to think about how to help our listeners, even from my perspective. If my CPA is also doing my bookkeeping, I'm sure when they see an expense, they're going to want to come to me and learn more and say, hey, they'll ask, well, I used to have a bookkeeper, and I'm thinking about rehiring him who did all of my bookkeeping. And he would always ask me, he was a CPA but didn't do tax work. All he did on the side was bookkeeping. Is he would ask me a million questions about an expense. You're claiming it as this. What was it for? Did you do this? Did you do that? Who was involved? And then he would go in and categorize it as a certain expense category. So in terms of communication with your CPA, is that along the lines of what you're talking about in terms of asking questions about certain expense statements that come off of your business credit card? And
right, exactly. And those are conversations that we have, during our monthly meeting. Sometimes we will send an email or a text depending on how we communicate with that person. But those are definitely those open items you have. And if you don't communicate with the person until February or March, and he has these questions, are you really going to remember what you did last January? I can't remember what I did last week. So
I can remember what I did in like 1986.
Okay, well, you're one of the lucky few.
I'm just teasing.
But then again, you weren't around in '86. So.
No, so
go ahead, Ben.
No,
sorry.
so the message I'm getting here, I think, which is a key one, which is something that I don't do. I don't communicate with my CPA regularly. It's maybe
I need to get better at that
once a year or twice a year. But I do communicate with my bookkeeper almost daily. And in terms of how that translates over to the CPA side, I don't know. But the biggest question I have in my mind now is, am I utilizing all the legal tax write-offs that are available for my type of business structure? And my guess is probably not.
Probably not. From based on my 6 years of doing tax planning, I would say I don't think I've come across anyone that's been doing even the basic things. And you want to talk about some of the real basic stuff that people should be doing?
And,
I want to know.
So I mean, we've talked about and beat it over the head, failing the plan and the wrong business entity. Okay. And I mean, I think a ground ball should be the retirement plan, right? There should be some kind of retirement plan. Mm-hmm. It's also a good way to keep good employees. How about, hiring your kids when they're old enough? I mean, we typically don't recommend our clients hire their kids until they're at least 11 years old. But there's actually the tax court has upheld hiring your children as young as 7.
Oh, so
right.
2 more months for my son.
My daughter's getting a job in a few years now.
Right. So and
no more slave labor, Jordan.
The way that works is, let's just say your child's going to ski camp, okay, and it's going to cost you $3,000. I'm just making up numbers here.
That's an awesome ski camp.
Yeah.
Right. Or a private school. Let's just say a private school, and it's going to cost you $6,000. So let's make that expense deductible. Let's put that kid to work. Let's document what that kid is doing. Let's pay them, say, $500 a month. Okay, they're coming in every Saturday, maybe a couple hours during the weekend. There's something that they're doing, and they're paid reasonable compensation. And that money goes into their bank account, and the dentist now gets a deduction for what they're paying the child. Oh. And the child doesn't make over the $6,500 number, so he pays no taxes. And then the school debits his account every month or once a year for the tuition. So you just turn that tuition into a tax-deductible expense.
Wow.
Oh,
So if you have two kids, that could be, $10,000. Another thing is the home office. All right.
Oh yeah, we both have home offices. So let's hear this. Yeah.
Right. So home office alone doesn't give you a huge deduction because some of that stuff you're writing off already, such as your mortgage interest and maybe your real estate taxes, but you get to deduct a portion of your utilities. But the big thing it does is now if you spend the right amount of time in that home office, which is around 14 hours a week, okay, it's considered by the IRS a bona fide home office. Now, anytime you go to your other place of a business, might be where you actually operate in the chair, okay, that travel is deductible. Okay?
Oh, wow.
It also
That's cool because I have a home office and I have an office in another city where my employees meet as well. So I can deduct my travel.
Yes, as long as it's a bona fide office in your home.
Yep.
Another thing it does, which is even better than that, is it allows you to have what they call an on-premises athletic facility.
Oh, nice.
Which that's for the use of your employees and their families. So that could be a home gym or it could be a pool.
I'm getting a pool.
Me too. I was just thinking that. Upgrading, selling this house and going to buy a bigger one with a pool and a gym. No, that's cool.
Yeah, that's pretty cool. Yeah, I had no idea.
Yeah. So those are two of the ones that are interesting. The gym and the pool are really cool. And it's tax code says you can
What
do
about
it.
a hot tub? I want a hot tub.
If it's a pool and it's for the use of your employees, yes. Okay.
So can your spouse be an employee then? Like
Yes, she can.
if she's not like a stay-at-home mom, and you can use the child employment strategy. Of course, they come in and contribute with the business. Like my wife helps me write articles. I don't.
Yeah, my wife does too. Yeah.
And I don't pay her right now. Why I haven't never paid her because she kind of owns all the money anyway. You know how that goes. But you can use that strategically, right, Craig?
Right, and now she's doing work for you. So let's just say you have a 401k plan. All right. So now you pay her say $20,000 a year, and she puts 18 of that into her 401k.
Oh.
So even though you still have to pay FICA tax on that, which is about 15%, we find most of our clients when they do that they save about $3,500 a year anyway, after all the FICA tax, et cetera.
Gotcha. Another question that comes to mind. This is something that we hear after that one year that Mitt Romney was running against Barack Obama, and Mitt Romney's tax returns came back, and I think he paid like in the range of 10 to 13%. And back then, a lot of people were like, "Wow, how do we get the Mitt Romney tax?" Do you remember that, Craig? Do you recall?
Yes, I'm old enough to remember that.
Hey, that was like only 4 years ago.
I don't think I'm old. Yeah. I wasn't born yet.
So somebody that says, how do you gain access to the Mitt Romney tax? How does that actually work? How come he was taxed at such a low amount legally?
Because he had acquired so much wealth that most of his income was coming in the form of capital gains and dividends, which are taxed at
passive income from like real estate, like rental properties, things like that, right?
No, more like dividends from
businesses.
Businesses and stuff like that are taxed at a lower rate as of today. So
capital gains is taxed at a lower rate, right? Than like if you're W-2'd.
Correct, long-term capital gains. So on sale, like your stock or a stock in his companies that he owned and stuff like that, or dividends from those companies.
So yeah, that actually sounds like a good idea, Jordan. We need to look into that because essentially, if you're living off of the dividends of the businesses that you own, you're taxed in that category, right? That much lower.
For let's just think about it for me and you, okay?
Yeah.
In order, if you own your own company in order for you to have dividends to pay, you have to have income. And that income on that corporation, depending on where it is taxed around 39%. So it's kind of not a good strategy for your own business maybe, but if you have a huge, very large stock portfolio, that's where it really helps out.
I see. Like owning like 20 different businesses and or at least being partial owner having partial ownership in them, that type of tax strategy would work better, is what you're saying?
Right. It could work better, yes, correct. Yeah.
Okay.
Go ahead, sorry.
Typically that's a corporation, that's a very large corporation, and they're paying their own tax, okay, and then they're dividending money out to their shareholders.
Gotcha.
Okay, I see. Yeah.
Not a closely held corporation that me and you might be thinking of.
Gosh, the
Okay.
government will get their money either way, it sounds like, you know. It's like everybody's
they'll
going to
figure
get
out.
taxed. Yeah, they'll find out how to tax you and they'll get the money.
So I have a question that I've been thinking about quite a bit about taxes. So I've been thinking about buying rental properties, and is there a way that my business could use that as a write-off to buy those properties, or is that just out of the question there?
Yeah, no, it's when you buy real estate, typically we recommend it being held in a separate entity anyway, God forbid something happens. And you don't get to depreciate that piece of real estate the way you normally would depreciate a piece of equipment, where if you spend $50,000 on a piece of equipment, you can write the whole thing off the first year. That doesn't normally work with real estate.
Okay.
But there is stuff that when we have clients that are buying real estate, typically, let's talk about residential real estate. It's depreciated over 27 and a half years. One thing we'll recommend maybe what we call cost segregation study, and that allows you to take more depreciation up front. So you get the deduction sooner, and that dollar in your pocket today is worth a lot more than it is in 27 years. So you want to look at the different things you can do if you own real estate.
Yeah, very interesting. That's something.
With a lot of dentists, they own the building.
Yep.
Okay, and then you want to make sure that's being done correctly.
Yeah.
So typically, would a dentist, if he owns his own building, would he set up a separate LLC for his own building or whatever entity he is recommending?
Typically, that from a asset protection side, that makes a lot of sense, and rental income is not subject to self-employment tax, so it doesn't hurt you there. And then you just got to make sure you're depreciating it the right way, and you're taking advantage of what you can. And we've seen a number of mistakes even when it comes to that, where they're generating a loss in their piece of real estate and a big gain in their regular dental practice, and they're not allowed to take that loss in the piece of real estate. When legitimately, if they made a certain type of election, they could take that loss.
Yeah.
Like, what's the election? I just heard this the other day.
Yeah, it's basically treating it like, even though it's two separate structures, treating it like you're making an election to treat it like they are really one operating entity.
Okay, that makes sense. Awesome.
Well,
go ahead, Ben.
No,
Sorry,
Craig, yeah. So there are three main things that you focus on: tax planning, certified tax coach, and then the CFO services. We haven't even talked about CFO services or that CFO aspect of growing a business. Can you explain what that is and how that would benefit practices? Because looking at it from the perspective of a small business owner, the question in my mind becomes, at what point in the business do you need to have a CFO in general, a full-time or a part-time
great
CFO?
question.
And then what is the role of the CFO in terms of growing the business?
So most dental practices aren't going to need a CFO. All right, they need a proactive, CPA, tax preparer, tax accountant, but they don't necessarily need a CFO until they get to the point where maybe they have multiple practices, and at that point, you could justify a CFO. But what we do with some of our dental clients is I don't even want to call them mini CFO services, but we'll take care of some of the accounts payables and stuff like that for them. We'll set them up with a system, so it makes it real easy for the dentist to pay bills and stuff like that. So he doesn't have to worry about writing checks. It's almost like he logs in, he checks a box off, and he authorizes a bunch of bills to get paid, and then he doesn't have to look at it till next month. So that's a service that we build into with some of our clients.
That's pretty cool. I'm personally very interested in this because knowing what I'm going to have to pay in taxes here in a couple of weeks and just the CFO aspect of the business, I don't need a full-time CFO now, but gosh, it would be sure nice to have somebody that would come and look at the numbers and help us coach and help us figure out strategies for growth, But the whole planning aspect of the business financially is something that I think is lost in a lot of small business owners that don't have the revenue to hire full-time, people to help with money, controllers and things like that big businesses have. So this is pretty interesting. So you mentioned that you do have that book, the 10 biggest mistakes that cost business owners thousands of dollars. How can doctors get access to that if they're interested in reading it?
So if they go to our website, which is CraigCodyandCompany.com, and if they go to /PPO,
okay,
there'll be a link there for them to just fill out, and then we'll get a notification, and we'll send that book out.
All right.
Oh, awesome.
So
they can also reach out to us via email, which is my email is craig@ccodycpa.com, and our phone number is 516-869-4051, and I'll give you all that for the show notes, so you have a link they could actually just click on and take them to the book.
yeah, absolutely. We'll post all that in the show notes, and then Craig, you're taking clients nationwide, right? You're not limited to certain states. If a doctor's interested, like we are, I'm really interested in how you can help. So
we have clients as far away as Oregon. We have them on the island of Puerto Rico.
Oh, wow.
So, we actually have clients pretty much all over places I never thought we'd be doing business in. We're doing business in.
So one of the last questions I have, a lingering question I know that a lot of people are thinking is, the money that you would spend in a tax coach, what's the advantage in terms of what you can help them save in taxes? Are you always ahead of the game?
So when we do a tax plan for someone, okay, we're looking for their first year ROI, which is return on investment, to be at least around the high 3s, 400%, and that's first year.
Wow.
Yeah. So you multiply that over 5 years, and so it's way high, and that's just based on our initial assessment. And
I'm gonna call you because I so far this kind of feels like a job interview for Jordan and I kind of asking you questions that because we're interested,
we're interested in.
I mean, I love Larry. He's our CPA here, but the reality is I don't really get this type of advice. I don't get the urge to, hey, you got to communicate with me on this stuff. And
I think that's important.
Oftentimes, like the conversation I had with Brent a couple weeks ago is, Ben, this is what the IRS is going to look for. So Brent had me raise the number, the dollar amount that I claimed to paid myself on a salary basis, and it's going to increase my tax liability by $5,000. And I don't really like hearing that because that's money that just goes straight to who knows where. And, I mean,
I hate hearing that.
Well, like I said, most accountants are really good at putting the right numbers in the right boxes. Unfortunately, tax planning for most accountants is just what you just said. Okay, you need to make this payment. We figured out how much money you made. You need to make this payment. And there's more to it than that. It's let's figure out. We all have to pay taxes. Okay, but let's pay the legal minimum that we have to pay.
Yeah, I feel like my accountant's been really good with that with me, and he's and obviously I'm pretty proactive. I read tax books. I'm kind of boring.
Do you have a pocket protector?
No, do you?
Okay. Yes.
That's awesome.
I also have I'm sorry to interrupt, but I also have a bone saw hanging up in my office. But I don't do amputations.
No amputations. Okay, good. I actually am very fascinated with tax strategy, and I've read a couple of books, and I've communicate to my tax. My accountant, right, my CPA, about strategies that we can do. But I actually love this topic, and I love finding ways to be more strategic about it. It's kind of a little passion of mine on the side.
Why haven't you shared any of that with me, Jordan? Come on, man.
I'm sorry, Ben. You got to read Craig's book. I'm sure he'll give you some awesome advice.
I actually am. I'm very interested because this is just a big pain point at the end of the year. I pay more taxes than I pay bonuses to the employees, and it's just sad, because that's money that goes and pays for my cousins that work for the government. But also, I'm just frustrated with how the government spends money and where all the money goes and the lack of accountability on all that. And I just get frustrated. That's at a certain point. There's a certain point of where I think that this is a fair tax, but I just think all around for the last several years of being in business, I know I've overpaid. Oh, Craig, by the way, last thing I'll share, 2008, I was taxed 130% of what I actually earned. IRS wouldn't let it go.
How does that happen?
I have
Holy
no idea.
smokes.
Their mistake on their end. I spent about $20,000 in legal fees to fight it, and the attorneys couldn't get anywhere with it. So I just paid it up. I was like, I have to cut my losses. So I ended up paying well more than $100. I mean, think about it. If you made $100,000, I paid $130,000 in taxes for 2008. That's the example there. I mean, it's just it frustrates me that the IRS is a bunch of, in my mind, I don't care if they're listening, they're a bunch of bullies, man. I mean, they just completely bullied my family out of, who knows how many vacations we could have taken during those years. And frankly, we didn't. We decided to not spend any money and not have any fun during certain years to pay off that tax bill. And I think this is key, because I don't want anybody to run into the mistake that I ran into, as I ended up hiring an attorney, spending an additional $20,000 to get nowhere, and then just had to pay off that tax bill. Otherwise the IRS is going to come in and put a lien on the house or garnish wages and put their hands in your own bank account, which I've seen them do before.
Thanks.
And so,
Right. Yep. You don't want to run afoul of them, and you want to try and do everything correctly. And that's why when we show clients things that they're allowed to do, part of what we also show them is making sure you dot those I's and cross those T's. So if you ever do get a question on it, you have the information already. You don't need to go back and try and find it. It's there.
Right. Well, Craig, this has been very enlightening. Do you have any closing thoughts with the listeners? For the listeners, that is?
No. Any closing thoughts? Just that, it's important to communicate. If you didn't get that out of this call so far, but we're there to help you, and there's plenty of good CPAs out there to help you.
Awesome.
Excellent.
Thanks, Craig, so
Craig,
much.
Yep. It's been a pleasure. Thank you so much.
Thank you very much for having me. I appreciate it.